Okay, yes. April, what am I talking about? June 9th, 4:23 UK time. And yeah, I just wrote an article on Medium. And writing is a chore, right? But writing is good because it gives a more permanent record of your thoughts and actually creates or cements ideas and thoughts in a more logical manner. You're gonna have to put in some work, right, mentally, which is good. So I'm going to share this with you. I'm going to read it out, and it's not a hard read at all. It's lots of charts, and but because I don't have too many followers on Medium, and also I can't post a link on Twitter anymore. There's there's lack of traffic, right? So people go on Medium who are avid readers, and most people aren't really avid readers, are they? People's attention spans are getting shorter and shorter. So let's dig into the latest from Balaji. Yeah, that's me. Here we go. Boom. Exponential technology is the solution to monetary madness. Yes, just now posted 6-minute read, so it's not very long at all. So yeah, I would appreciate if you spread this around on Twitter. I can't do it, or share this YouTube link amongst Hexkins, your friends, family, Bitcoiners, because there's actually some good Bitcoin information too. Okay. And anyone interested in finance or improving their monetary situation, this has been a tough year or so, year and a half, and if you've just been on furlough or lost your work, your income, it is crucial to take measures to improve your situation, right? So here we go. The US dollar continual slide against M2 money supplies. Spend the currency as fast as you earn it. Necessities first, assets second, yielding assets being the ultimate place to park your money. And this is the Dixie DXY measured against M2. Holding dollars for a rainy day, never a good idea. Look at this. We've basically gone to zero, even basically zero. Can never go negative, obviously, but it's as close to zero as you can get. And space from 1987. This is kind of a Greenspan era, post 1987 crash. And so even back then, it wasn't actually too bad. 5% of total dollars in supply. Well, this is kind of 5% against the M2 money, right? Dixie. So it's getting beaten up, right? Everything's getting beaten up against the Fed balance sheet, right? So our job is kind of to mitigate this money printing and to exceed the inflation of the central banks, right? Central bank and the Fed, being chief culprit, have painted themselves into a QE corner. Exponential growth technology is the world's saving grace. Always has been. They are unable to increase rates because the value of their notes become worthless over time. Hence the absence of foreign buyers of their treasury notes, which requires Fed to take up the workload and be the buyer of first resort. I think they're purchasing 55% of newly issued treasury notes at this moment in time, or this past year even. A Ponzi collapses because of lack of new investors to pay the old investors. They must assume exponential expansion of their balance sheet, talking about the Fed here, to prevent a multi-decade depression that occurs from asset price implosion. See 1929 and the Depression and Japan's lost decades post 1989. That was when the Tokyo and the Tokyo housing peaked, and the Nikkei peaked as well. Still yet to surpass that all-time high 32 years later. The stock market is skittish about how bond yields on the longer end of the curve have been on the rise. You can kind of see it here. FOMC forecast is trying to get off of zero, isn't it? Due to the expected rise in inflation, Fed fund futures rate, which are these curves here, they're only like short-term, basically trading vehicles for investors on Wall Street. Fed fund futures tend to overestimate future inflation, right? This is kind of a close approximation of inflation, the effective funds rate, but it's not really. And this is the price of these future contracts that people trade on Wall Street again. So they're always kind of anticipating higher. But look how the Fed kind of suppressed the interest rates back since 2008, right? And what did they do when Trump got into office? They raised it on him. Yeah. A hyperinflation. Oh, here we go. Okay. Yeah. A hyperinflationary decade. Is that hyperbole saying hyperinflationary? Maybe. High inflation, right? Very high inflation, close to hyperinflationary. Decade seems a likely outcome, as we are seeing in the commodity complex and PPI, which is the producer price index and the consumer price index. US inflation rate hits 13-year high, 12-month change in the CPI, and these are always understated because they keep eliminating basically things that are rising too fast from the basket of measures, right? So we are above 4%, highest since when? Back in 2008. Peak of 2008, right? As the global fiat currency race towards zero remains firmly in place, countering this backdrop is the rise of technologies growing at exponential rates, which help to create and sustain substantial wealth in the form of greater efficiencies at a lower cost. Blockchain, AI, and other forms of bleeding edge tech are formidable forces that could go a long way to averting a massive crash, stroke revolution, stroke global war. Unlike prior key turning points in history, right, when such technologies did not exist, when everything was all manufacturing and tangible assets, it was harder for innovation to occur. Right, innovation occurs now with code. Implement new code into your product, and you have got a revolutionary new tech, right? So that's why the demand for chips is being so outpacing the supply currently. Post-COVID recovery. When the German economy improved post-World War I in the 1920s, Germans came out of their austere economic hibernation and started to spend, which sent inflation soaring. This spending, together with the burdensome repayments due to war reparations, the treatment of Versailles, required a Reichsbank to print, much like the Fed is required to do so today, to meet its step payments, which spurred hyperinflation. The price of gold in German marks soared in the 1920s from basically just above 1 to that's 100 million. That's a billion. Well, yeah, this is these numbers are getting so large. Okay, a million, 100 million, a billion. That's 1,000 million, and then that's a trillion, right? Okay, went from $1 to a trillion in the space. Look at how quick. 1918 to end of 1923. Enter Bitcoin, gold for the 21st century. The price of Bitcoin could follow as the world sits at record low interest rates and record high debt, and the printing continues to accelerate. So this is Plan B's graph. Obviously, just overlaid Bitcoin on top of this, right? So where we're sitting right now, Is this line slightly old? Yeah, we're around there, 36,000, right? 36,000. We did hit as high as 65. So 100K is not too far away. But look at how it goes vertical, right? Not saying it's going to reach these numbers, 100 trillion USD, but 100K seems a certain lock for our next major milestone, right? The S curve tech adoption shows the speed at which new game-changing tech. Sorry, got to edit that. Are accepted into the marketplace. At first, the majority don't understand nor support and often fear the technology. That's basically Bitcoin for most of this previous decade, right? Then, once the technology grows to the point where it becomes useful, mass adoption takes place, which is seen in the near vertical portion of the curve. These are historical S curves of new tech. So you've got power steering, right? Remember when you ever driven a car that didn't have power steering? It was a workout trying to park that bloody thing, right? Microwaves, again, S curve, boom. Cell phones, early people use cell phones were kind of mocked. It's like, why do you need that? Early people who had luxury cars with built-in phones were kind of like, kind of sneered at. But now it is ubiquitous. Nearly 100% of people have a cell phone, right? Computer, kind of hovering, kind of smartphones taking over that. Anything else? Tablet. This is interesting. Tablet still going up. Podcasting, yeah, still only 50%. So that'll probably get to 70%, 75%. Tops. I think it won't get to 100% of people podcasting, but you never know. Eventually, the right part of the S shows slowing adoption, right? That's the top of the S. Obviously, once it reaches market full adoption by the marketplace, right? And becomes fully integrated into society. Some technologies, such as the internet, continue to grow exponentially as... Where's the internet? Yeah, is that the red line? Yeah, I think so. It's getting close to 90% now. And this is interesting. Look, this is when you're too early, right? So bottom of the S, you're kind of too early, but you're not too early. You're kind of waiting for the adoption to come, and you keep, that's kind of been the crypto mantra back in 16, 17, 18, right? Now it's 2021. Adoption, right? Some technologies continue as the internet continues to grow exponentially as new use cases are created. Bitcoin currently has about the same number of users as the internet had in 1997, but Bitcoin is growing faster. Bitcoin is growing faster. By 2025, with Bitcoin users continuing to double each year, the total number will exceed 1 billion people. It took the internet 8 years to get to this same level. Plotted logarithmically, Bitcoin is doing incredibly well, which bleeds into other cryptos, of course. So Bitcoin users, January 2021, 135 million Bitcoin users. 1997, 120 million internet users. You can kind of see we kind of reached a epoch moment this year, right? And so this is Willy Woo's kind of projection. Bitcoin, credit to Willy Woo. Bitcoin users in 2025, post next halving. Interesting, right? 1 billion users. And then you can see 2 billion users probably another 4 years away, right? Probably that's when you kind of get into the S curve, right? But this is a log chart. If you did a regular chart, it'll be quite something. One of the more important metrics, again, this is from Willy Woo. Bitcoin NVT price, or network value to transaction, is showing how Bitcoin is currently undervalued. As Willy Woo writes, NVT values the network using its on-chain investor volume, akin to a PE ratio-ish. MVT price is calculated by multiplying on-chain volume, okay, which is open to everybody to see, by the 2-year median value of NVT ratio. So this is what Willy Woo has calculated. So credit to Willy Woo to putting this type of work in. Very helpful indeed. That network valuation is then adjusted to the price by dividing by the coin supply. Of the coin supply should be, right? Here we go. MVT price, this green line here. If you can see that all the way here. Okay. And the blue line is the market price of BTC. This is the December 2017 top at just below 20,000. And interesting that the December 2018 bottom tagged the NVT ratio, right? So something either people are looking at, or is just a magical coincidence, right? Confluence coming up. And as you can see, it really dips below, right? It really dips below. So we are currently quite away from the MVT price, right? And this purple line kind of shows you the premium or the discount you are paying for Bitcoin. So it kind of gives you, a good opportunity, right, to assess what are you actually paying for the price of one BTC token, right? As you can see, Bitcoin dips below MVT price on rare occasions. 1, barely there. 2, 3, and currently 4. This is in 4 years, right? And you can go back mid 2013, January 2015, February 2018, March 2020 over here, and May 2021 right now. In every case, except in early 2018, Bitcoin has been at a major price low. And this was when it dipped in 2018. And if you bought there, you kind of had to endure a whole year, right? Whole year plus a major flush out at the end. But eventually you were in the green over here, right? So a year and a half of pain-ish, unless you keep accumulating, right? So you took this opportunity and then saw the MVT premium kind of fade away again. Then you double down, right? So you would have been in profit here. Whales are born during the time when it is most difficult to buy. Traders are often too focused on short-term time frames, that should be, to catch these moments as they are too emotionally wedded to their daily profit and loss. They often fail to accumulate at spot and add to their hodl position, should be. Market timers and picking the right altcoins that outperform Bitcoin does indeed go a long way in helping to turn a average altcoiner or S-coiner, how depending your stance and your point of view, can turn an average altcoiner net worth who may only have 5 figures to one that has a 1 comma, which is 6 figures plus, 100k plus, 100k, 200k, 300k. You get the idea. Or even 2 commas, as in a millionaire. Yes, turning 10,000 into a million has been done by a lot of people during this past year, right? People who were doing the work in 18, 19, and even 2020 during the dips. They got rewarded, right? They got rewarded. They weren't lucky. They weren't lucky. Believe you and me. Okay. So, yeah, you can try to outperform Bitcoin by picking timing the market, by getting to alts, but it carries greater risk, of course. High net worth individuals such as Bitcoin billionaire Brock Pierce are not traders. They could greatly enhance their substantial wealth by proper market timing methods designed to catch the major trends, such that very little trading is required except at key tops and bottoms where would be required. Wait, I need to rework that. I myself have mixed trading, hodling, and shitcoin investing before finally landing on DeFi. And I was, experimenting even back in 2017 with staking coins and all that kind of stuff, kind of looking for what I kind of found. And they weren't really well, they were kind of a new kind of form of cryptos back then, staking coins. And they never really kind of were designed properly. Not like Hex, right? Hex. So this is from CoinTrader Pro, this chart, so which gives you the history back into December, the launch of Hex, right? December 2019. And look at this. It's basically been one long, basically early adopters, right? Getting in and doing the work when it was tough to buy. Yeah, it was very tough to buy during this period amidst the FUD. In Bitcoin's first 500 or so days, Bitcoin had $0 value, much like Hex, below a penny being this level here. So it was tough. Yep. Early adopters and supporters helped form the backbone of a vibrant and intelligent community. Many of them ex-Bitcoin holders, myself included, along with the creator and author of the code, Richard Hutt, who took it upon himself to design and create a product built on the Ethereum public blockchain that was more optimally designed and beneficial to the actual users and investors in using Bitcoin as a base model of the design, and kind of putting in game theory and optimizing the whole user experience and the investors, right? Optimizing it for investors who are looking for high yield. High yield has never tasted so good, as the price chart shows 6.5 cents currently at time of writing. If Hex is to follow a similar S-curve adoption, bottom of the S, inflection point, meat of the move, right? As many game-changing technologies do, then buckle up for a near vertical ride up the S. $1 seems an attainable price level in the coming months. And this is the price chart of the T-share available on apex.win. Apex.win. Credit to the creators of that website. So the T-share, which is only available in the Hex contract, was priced at, I believe, 60 cents at the all-time low. Currently trading around $1,100. $1,100 on its way to what? 10,000? 10,000 plus 20,000. Yep, it's coming. The driver of Hex meteoric price-wise is the share system, which are purchasable only within the Hex smart contract, and only purchasable with the currency of Hex. So, okay. Hex rewards the savers of the community through new coin supply, which are minted only once their staking contracts have matured. Ending your contracts early is possible, but can incur penalties to your principal depending on at which point you decide to terminate your contract. Inflation is beneficial if you are the direct recipient of the work you initiated by purchasing a Hex T-share, which stands for a trillion shares. The price of a share is a function of the demand and supply of the token and the earnings that one share can deliver. DeFi is the best use case of blockchain I can think of currently, and Hex is the purest product on the market after I did my research, of course. Become an early adopter today. Why don't you? That's an old article. Yep. Yeah, so good stuff there, I believe, and I'll go back and clean up some of the typos and grammatical errors. But yeah, please give it a share. Some good analysis, I believe, about new tech, right? And against the backdrop of monetary inflation that we are all experiencing right now. US CPI, boom, 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 right? The dollar, disastrous, right? And when you measure the Dixie against a basket of other currencies who are printing just as much, it may not go as down much, or it just kind of rotates between undervalued and overvalued. So you can't really just look at the Dixie chart alone, right? So you kind of have to measure it against actual goods and services. Gold being, it used to be a metric, but not really for the past decade. But against BTC, you're kind of seeing this explosion, right? So, yep. Quick article, and again, I'm going to clean it up. And so please give it a share, and I hope you enjoyed what, and especially if you're a Hexagon, right? Breaking out. This has been a month of forming this beautiful HVF, hunt volatility funnel, and we're going to hit 10 cents. Probably in the coming week, 2 weeks, 3 weeks. It's going to happen rather quickly. So the more people you can get into the contract, the sooner the better, right? But they should be still rewarded at some point during the year if we hit a buck. I think we will hit a buck this year, 2021. Okay. Cheers, guys. Hope to see you on the next what effing hangout or crypto DJ Crypto Maniacs music show on Twitch. Is always a good time. All right, guys. Peace out.